What's up, everyone? It's Anand, and welcome back to the channel where we unlock financial freedom one step at a time. Now, I know a lot of you are eager to dive into the world of investing, especially the stock market, but you might be a little intimidated. Trust me, I get it. It can seem like a jungle of confusing terms and risky moves, but here's the thing. You don't need to be a Wall Street hotshot to succeed in the stock market. That's why in this video, we're breaking down the basics of the stock market, making it super simple for anyone to understand. We're talking about the key players, how it all works, the potential rewards you could see, and of course the risks you need to be aware of. We'll equip you with the knowledge you need to start investing wisely. So whether you're starting with a few bucks or a few grand, this video is your roadmap to navigating the stock market with confidence. All right, let's kick things off by getting familiar with the major players in the stock market game. First up, we've got the companies, the heart and soul of the market. They're the ones offering pieces of their business, known as stocks or shares, to the public in exchange for, you guessed it, money capital they can use to grow, expand, or launch new products. Next, we have the investors. That's you guys, the ones looking to buy those shares and get a piece of the action. You could be an individual investor like myself, or a big institution managing tons of money. The stock market doesn't discriminate. It welcomes everyone. Now, where do all these transactions actually take place? That's where stock exchanges come in, acting as the central marketplaces for buying and selling stocks. Think of them like giant online auction houses, but instead of vintage furniture, you're trading pieces of companies. Some of the biggest names you've probably heard of are the New York Stock Exchange, the NASDAQ, and for us global investors, there are international exchanges all over the world. Finally, we have the brokerages. These are your gatekeepers to the stock market, the platforms that connect you, the investor, to the exchanges where you can buy and sell stocks. They act as the middleman, executing your trades and sometimes even offering research, advice, and other tools to help you make informed decisions. Now that we know who the key players are, let's dive into the mechanics of how this whole stock market thing actually works. It all starts with a company deciding to go public through an initial public offering, or IPO. This is their grand debut on the stock market, where they offer shares to the public for the first time. The IPO process involves a lot of paperwork, regulatory hoops, and of course, setting an initial price for their shares. Now, this initial price isn't just some random number they pull out of a hat. It's determined through a combination of factors like the company's financial performance, industry trends, and good old-fashioned supply and demand. Once a company goes public, their stock starts trading on the open market. This is where things get interesting, because now the price of their stock is driven by, you guessed it, supply and demand. If more people want to buy a stock than sell it, the price goes up. If more people are selling, the price goes down. So as an investor, you're essentially betting on the future success of a company. You're hoping that the price of the stock you buy will go up over time, allowing you to sell it for a profit. Of course, there's no guarantee that will happen, and that's where risk comes in, but we'll talk more about that later. Throughout a trading day, you'll see a stock's price fluctuate up and down, sometimes dramatically. That's just the market doing its thing, reacting to news, earnings reports, economic data, and even tweets from certain CEOs. With all this talk about risk and volatility, you might be wondering, why bother with the stock market at all? Well, despite the risks, there are some compelling reasons why the stock market has been a wealth-building tool for so many people. First and foremost, the stock market offers the potential for significant returns. Historically, the stock market has averaged returns of around 10% per year, which is significantly higher than what you typically earn from traditional savings accounts or bonds. Of course, past performance is never a guarantee of future results, but it does highlight the growth potential that the stock market offers. Investing in the stock market is one of the most powerful ways to grow your wealth over the long term, especially when you consider the magic of compound interest. Another benefit is liquidity. Unlike investing in real estate, which can take months or even years to sell, stocks can be bought and sold with just a few clicks, giving you relatively easy access to your money should you need it. And let's not forget about dividends. Now, not all companies pay dividends, but those that do are essentially sharing a portion of their profits with their shareholders. It's like getting paid just for owning a piece of their business. Now, before you go all in on the stock market, it's crucial to understand the risks involved. Remember, Investing always involves some level of risk, and the stock market is no exception. One of the biggest risks is market volatility. The stock market can be incredibly unpredictable, with prices fluctuating wildly in the short term. Economic downturns, geopolitical events, or even a simple tweet can send shockwaves through the market, causing your investments to lose value, sometimes dramatically. Then there's company-specific risk. Even if the overall market is doing well, individual companies can struggle, leading to a decline in their stock price. That's why it's so important to do your research, understand the businesses you're investing in, and diversify your portfolio. Speaking of diversification, let's talk about why it's so crucial. Diversification is essentially about not putting all your eggs in one basket. By spreading your investments across different asset classes, sectors, and geographies, you can mitigate the risk of any one investment taking a nosedive and wiping out your entire portfolio. That was a crash course on the stock market. We covered the key players, how it works, the potential benefits, and the risks you need to be aware of. Remember, investing in the stock market can be a powerful way to build wealth over the long term. But it's not a get-rich-quick scheme. It requires patience, discipline, and a solid understanding of the fundamentals. If you're just starting out, don't feel overwhelmed. Take your time, do your research, and consider seeking advice from a financial advisor you trust. And remember, the most important investment you can make is in your own education. So, hit that like button if you found this video helpful, subscribe for more financial tips and tricks, and I'll see you in the next one.